Welcome. Thank you for joining me. So what am I going to go through? Well, obviously, you've been patient and waited for quite a while on this update, and hopefully it has been worth the wait because there's a shitload of new stuff on this for you to get your teeth into in a time in the markets where you really need it, right? We really need it because it's pretty crazy out there, right? I couldn't work out what happened on pound pairs and GJ last night at rollover. I think it went up 100 pips at 10 past 10. So it's feisty. It's feisty. But I want you to leave this feeling like you've got all of the tools in the toolbox you need to still win overall. And what's going to take time moving forward is to make sure that you know how to use the tool that's in your toolbox in various different ways to navigate the stormy seas that we're seeing right now and we'll probably see for the near medium term future, right? Thing is, there's always something. There's always something. If it's Brexit, if it's COVID, if it's invasion, inflation, all of that stuff right now too. So there's usually always something. Right. So I'm quite cautiously optimistic that you will feel the same. So first things first, downsides. There are downsides of any trading strategy. And I make no qualms to highlight what ours are because I'm not fucking naive. I'm not precious. And I know what the downsides are. And up until now, these downsides probably haven't been attacked to try and reduce the downsides in the ways that we now have. So I think ultimately, let me just run through what these downsides are. Managing risk overall. The whole concept around what we do in an ideal world is if you can hit one in a challenge, that's fine. One of your max losses or your EP or whatever we want to call it. If you hit one in a challenge, you probably still stand a chance of passing. I've hit a couple before and still passed. It all depends on your approach, but it's never a fucking nice feeling to take a minus 4% up the backside, is it? It genuinely isn't. It's like snakes and ladders. You've climbed up some ladders on the snakes and ladders board, and then you hit that snake that is the big one all the way down. And that feels proper shit, right? So I'm conscious of that. And hopefully you will feel like what we've put in this reduces that pain. I hit like one or two, I think overnight, or definitely one on the GJ Open. I'll show you that account. And I took $1,000. And overall for the day, I'm probably still minus less than 1% or 1%. In old money on versions before this version, that would have been a minus 4% hit, I'm pretty sure. So this is such a massive, massive change in just that one thing alone. So managing risk and overall account recovery from losses. So ultimately, we've dealt with this in two ways. One, with split risk concept. So we can run numerous strategies on the same account. You could run fucking 10 if you wanted at $400 a pop, or you could run 2, or you could run whatever you like. Being able to diversify strategies without a copy trader, also a current downside. You would need to get a bit complicated with accounts. And obviously then we're adding another cog to the wheel with social trader tools. We can still use copy traders to diversify prop accounts, which I still do, and that makes sense. Max lot exposure, that's also something that if we're running a martingale strategy, which works with risk management, you know, our lot size can become a little bit out of control. I know we've got the risk management to try and manage that mitigation and that downside. However, with the max lot exposure, we can cap that now too, but I'll get onto that. But that's a current downside. News, current downside. People like to be able to manage news, turn off, know what's happening. Something that I've had strong opinions on before, but again, I want to give you what you need. Optimization, efficiency, and time. Some of the optimization processes currently on 6.5 and below make it difficult, especially with RSI, testing different levels, time frames. They're the main things, really. It makes that optimization quite inefficient. This is blunt and to the point. One EMA was a bit shit for trend trading. It added a new dimension to what we were doing that we hadn't done before. But what we've got here is chalk and cheese. And the last one, it's a bit shit right now that there's no real clarity or visuals in and around what's going on. A new member joins, and we know it's frustrating when someone jumps in a ticket, no trades are opening, yet delay's probably doing its thing or whatever. Well, now with the visual control panel, we've got that covered. So for me, these are the current downsides, and that managing risk and that account loss for me in that is probably the biggest one. So what's new? A shitload of things is the short answer. So faster testing, more efficiency in the code, how the EA does its thing. There's a noticeable difference here. So we did a back test. One took 2 minutes 55 on the old version. New version, it took 57 seconds. Same result, same strategy, but a third faster. So that can only be positive. So the trade randomizer is such a massive, massive thing because we could run the risk of triggering the same entry, RSI, delay, whatever. We can trigger the same entry at times. So with the randomizer, there's a random 5-second, 0 to 5 seconds delay on every trade entry. Okay. So that's going to help trigger a different trade slightly to keep that account as unique as it possibly can be. But also remember to manage your lock profit and trailing stop for exit, because you can't randomize exit because it's based on a market order, which is different to the open as such, but still way better than not having it. Max lot size, I explained previously. So we can now set a cap as per where that lot size stack of trades won't go over. It will still open the trades, but the max lot size will stay at whatever you've set. The news filter. So this is linked to forexfactory.com. You need to add a web address into the website like you do for the licensing portal. That has now been updated on the licensing portal with the web address that all you need to do is go and copy and paste. So make that as simple as we can. We've also made a decision for you to add the rules around this news filter. We've tried to remove options for you in terms of testing that really you don't need an option to test. So we did some exploratory testing, but again, what makes sense? The reason I don't like news filters is because when do we turn off? When do we turn on? What news are you looking out for? Does it make sense with the strategies that you're trading and want to be off for? Because some don't really make sense. So basically it's red news and USD is included in everything, which I think is an important factor because it moves the markets the most and everything can be linked to a point. So that was something we decided to do. And the other key thing, which it wasn't at the beginning of this process, is that it's now back testable. So what we have to do each week is update the EA with the download for the news within the code for the back testing and the forward news coming too, for you to back test to and update. So we will update in the announcements channel every week when we've updated the EA in the license portal. Some of you probably won't update, some of you won't be asked, some of you will, but that is just something that has to happen when we run a news filter like this. So that will basically turn off or manage open trades 1 hour before and restart again 4 hours after, but it will show you all of this in the news panel. Licensing system. So instead of kicking you off on a Sunday night because it can't read that it's valid because the market's closed, that license timing has been increased. So that shouldn't and won't happen moving forward. There's more. Accelerated recovery is something that's now in. It's something that we've explored manually so far. And I'll be honest, I quite like the manual bit of it because it sort of gives me clarity in what I'm doing, why I'm doing it. However, in having discretion and doing that manually, we can't backtest that works. By having accelerated recovery in, we can backtest to that process. And there's a few things to consider in and around that I'm going to go through when we go through the inputs. Profit and loss, I meant to put that in green. Again, another thing. So having a profit close, there's absolutely total logic in thinking, let's get in the market, let's bank 0.5%, 1%, let's turn off, put our feet up for the day, smoke the Cubans and have a nice day without any stress that any trades are running. But previously we couldn't test to that. We couldn't test to that because the profit close was an absolute thing that stopped the EA. We've now got both. We've got a daily profit close. We've got an absolute profit close. So you can backtest a strategy to a profit close feature. Split risk management. Again, I mentioned that at the start. So you can run as many pairs and charts as you like. Make sure the magic number is different and the loss is on that particular strategy and on that chart. This is really important because this is a total difference to what we've done previously. Before, you would add, for example, 4 grand on a 100 grand account for round figures, and that would have a global effect. If one strategy hit that, or they all did collectively, everything would turn off. Now what we can do is compartmentalize each strategy and give it our own risk amount, which is like you would do as a manual trade. If you're a manual trader trading 5 pairs and you wanted to risk 1% on each pair, that's literally what we're doing now. Yeah, so we've got the benefits of almost like that manual trading approach, but within an automated trading strategy, which I think is ideal, as opposed to one strategy taking over all of your max loss that you've set on that account for the day, which then is going to stop the others working and limit your diversification and risk management at the time. That's the biggest win, in my opinion, as well. New display and control box looks sexy as whatever, but more importantly, you know what the EA is doing, when it's doing it, and why it's doing it. Strategy description, a simple one. You can type in what strategy you're trading and it shows in the control box. So sometimes that can jog your memory with what set file that is when you're testing it, what the approach was. Reverse, this is another massive thing. So there's quite complicated logic to reverse. Again, I'll touch on that shortly. Improved testing options, timeframes, and inputs. So we've slimmed down the timeframes. Previously, you would look at M1, M2, M4, M5, and I don't know all of them, but there's is too many. There is far too many timeframes for you to look at a sensible optimization. If you wanted to look at M1, M5 or M1 to M15, you would have M1, M2, M5, M10, there's just too many. So we've slimmed them down because you don't need them all. You're just fucking about with timeframes and stuff that you don't need to mess around with. So we've slimmed that down to help you have a more effective and quicker optimization. EMA, fucking some huge changes to how we trade with the trend. Some really clever stuff in there. Oh, and checking when the EA initializes. Great one for new members too. This should be run on the 1 minute chart. Not saying it doesn't work on other timeframes, because sometimes it can if you back test on it. Definitely nothing above M5 in my opinion, but you might find something that works on some of the others. But it's going to warn you. Whoa, are you sure? You want to put this on not a time frame other than 1 minute, and that way you can override that and go yes, or at least it might go, oh shit, I realized I was making a mistake. There we go. So now what I'm going to do is show you firstly the terminal and some of the options and how that changes. Then I'm going to go through to the EA inputs part, and then I'm going to share some whiteboard illustration stuff. However, what happens next? So any set file that's currently in the Google Drive will not work on this version because there's just too many new inputs. It won't load. So you can pretty much run any set file that you found or used so far on this version. I would say, unless you've got a specific EMA strategy, you can still make it work potentially. Depends what it is. Yeah. So you'd have to explore and check in on that. Worst case scenario, you can use the current version. But if it doesn't work on V7, I'd like to think that you can quickly run a re-optimization or whatever it is that you do and make that work, because the upsides to going to V7 are far greater than 6.5. Everything's navigatable, right? Even if you run on one and feed it into another, there's always a way around everything. We will then start working through the tools that you need to trade in the markets that we're seeing right now. So I've shared a lot of this over the last few Zooms based on managing and looking at trading volatility, looking at pip values, looking at the drawdown calculator, and coming up with a strategy that works within a much wider range in the market that we're seeing right now, and reviewing that weekly. If you look at a volatility range calculator, how the markets have shifted from 12 weeks to 8 weeks to 4 weeks to the last 1 week is colossal. Some pairs have moved double what they normally do. We need to just accept that, and we need to know how to use this tool and what other data and information we need to be able to use this tool to set that up to navigate these markets. Yes, strategy testing, walk forward, in sample, out of sample also has a place. And I've got Scott in Oz. He's done a great visual tool on how to test 4 diversified strategies on the same pair and how our back testing strategy gives us predictability in the market. And I've got data that he's helped do to prove that. However, please accept that in these very uncertain markets right now, that predictability is much tougher than normal, because we don't know what's coming down the pipe in a very uncertain world. Hence why diversification is more important. Our risk management is more important than ever before, because you are going to get strategies that you've done a great in sample and out of sample back test on that might not just carry on in a live market because something fresh has come down. For example, GU to move 500 pips in a fucking day and make a new low that's not been seen before ever. That's not back testable. Yeah. We've actually seen less of that in gold actually recently, but that, for an example, is an extreme. But those extremes are what we're seeing right now. So I want to make sure you know that that's still fine, but accept there's a bit more unpredictability in that, but diversification helps, but also the other ways of managing for volatility. So I'm planning on trying to pull all this together within that Google Drive or tools to help you over the coming few days. Some of you know all this already, that's fine. And if you're new to it, you got to have an open mind, a growth mindset. You got to put some time in to grasp what it is I'm trying to help you understand. So yeah, right, on to the next thing. Here's the visuals. Basically, the screen changes. Normally we've got a grid and it doesn't look very great. So basically colors and the visuals change, but more importantly, we've got the strategy description, we've got the time, we've got the trend. So that's reading the EMA stuff on the EA itself. So if I've got a 1 hour EMA, I might not even be trading it. It might be false, but whatever I've got in there is going to tell me if that thinks the market's flat or trending up or down. We've got what the balance is. We've got open P&L, and we've got the fact that these charts currently, unless there's an open position, which there is on CAD CHF, they're the only trades that I've got left open on this account. It's paused for high impact news, and it tells you what that high impact news is on the screen. Now, in my experts journal, when I also load the EA, it tells me what news is updated on that EA version. So at the minute, if you download the EA, it's going to say up until the 30th of the night. So we are going to update that. So you've got the next batch of data within there. Okay. It's going to tell you in the experts tab. So yeah, that's the visuals. This account peaked at 104, 105K, but over the last 48 hours has hit some losses on GJ and GU. These should have been uncorrelated pairs, but I wanted to really push this and see the extremes because they're the worst pairs to test this on ultimately. But in real world, you would not be running £2 pairs. So this account is up 1.5% on a week that's been incredibly volatile. So I've got various losses within this, 1% here, 1% here, 1% here. There's probably 4 or 5 losses within these pairs on this account. Now, again, on previous versions, that probably would have wiped me off 4%. And this account, instead of being at 101.5, I could have failed, especially on GJ. Look how big GJ's moved. Huge. And I'm 1.5% up. I've only got 3 positions open. I could close these and restart again Monday, which is actually what I'm going to do because that's a good decision. But yeah, hopefully that makes sense. That split risk management concept. What am I doing here? I'm running a martingale approach on 4 pairs. I'm running martingale because I've got small pullbacks and I've split my risk across them pairs. That's quite a simple process. I've got no delay, no RSI, no EMA. That might be a bit weird, but in terms of trading volatility within a range, markets going up or down, it can be incredibly simple and still work. The other one is the EU account. This has had a bit of drawdown. I planned for a 300 pip move in my strategy description to jog my memory. EU split 300 pips, 2% risk, long, short. Now this equity is not really gone anywhere, but if we can absorb this move and bank back the other way, let's see how it plays out. But again, I've planned volatility and I've had a week where, okay, I've banked 1.4% on balance, equity is where I'm at, but I've not taken any 4% hits. So I've had planning in my execution. Yeah. And that's really important. So I'm going to go through this. And what you can do is remember Banker EA Inputs is a specific website. In the Discord, it's an EA Inputs channel, and you can just review this. This is there to help you. So strategy description, really simple. Put in whatever you like in that box and it's going to show on the EA. Color scheme, dark mode, light mode, whatever bloody pretty colors of the rainbow you want, you can put in there. Magic number, how the EA knows what trades it's managing. So different multiple charts, different multiple magic numbers. Please do that. Trade comment. I recommend all of you use the trade comment box. Obviously, if you're using a copy trader, that doesn't copy the trade comment, but whatever trade copy you use, you can still put your own trade comment in. So if you're Fred Smith from wherever, you could write Fred Smith EA 2022. Whether or not that helps navigate a prop firm issue, I don't really know. Is it going to hurt? No, it's definitely no harm in putting your own trade comment in there that's unique to you. API key, licensing system, very, very simple stuff. You know that already. Pip step, PSE, delay, trading direction, maximum orders are all unchanged right now. Okay, so reverse is going to flip how the trades are managed. So I'm going to go to my white screen right now. So normally with RSI, let's say we're looking at 70-30. Right now, if RSI got into this section and we've got a 70 level and we've not got a trade delay or anything like that, we could enter a sell in here and look for a reversal. Now, clearly, when something's going overbought, it's going up, right? And it normally goes up a little bit before it drops. So what reverse is going to do on RSI is actually buy here and not sell. So the logic would say that you probably want a small block profit trailing stop. You might not really want a delay. You just want to get in, grab some pips and an upward move and get out. Now, a good strategy concept here is you could run both. You could run a strategy concept and a test based on looking for these reversal points and looking for grabbing profit. Because ultimately, if it goes up a little bit and you can bank here and then it reverses and you bank there, happy days. Happy days. That's the best case scenario. Worst case scenario is one of them works and one of them doesn't. If there's a really strong trend and it doesn't pull back on this strategy, well, it's definitely going to bank on this one, isn't it? So again, best case scenario, both bank. Worst case scenario, you've got a bit of diversification. Instead of losing minus 4% here, that's the biggest win. Now, if you're running delay with reverse on RSI, it's just going to buy obviously a little bit later in to that move up, which probably doesn't really make as much sense. Now, with the EMA on reverse, this stuff gets really bloody complicated. And it gets complicated because for me, reversing a trade that would normally open with a trend and flip flipping it the other way made no logical sense to a strategy, in my opinion. Not when we could do that with RSI or high delays and other things. It made no sense. So what delay does with EMA, it basically flips the delay logic. You almost don't need to know that. However you backtest and whatever it does, it's going to do what you've backtested and found good results for. But in short, what would normally happen is, let's say we get a downtrend and we get this. Now, if we're running in line with the EMA, we'd be looking to sell. And if we're running a delay, these sell trades are probably going to get in some drawdown, and a delay would mean we open around here. And this is a perfect entry if that's the case, and sell continues down. Now with sell and reverse, it's still going to sell because it makes no sense to reverse it. What we're actually reversing is this bit of logic here, because it's actually going to look for extra confirmation that we are actually going down. So your sell entry is going to be further down, which knows that that trend is strong and then gets you in a little bit later. So it's just getting your head around that a little bit, because that was really tough for me, to be honest. So the reverse on EMA is just that extra confirmation that we're going down. But again, whatever you back test to it, that's how it's going to run. Stop loss, take profit, lot profit, trailing stop, all the same. Lot size, lot exponent, all the same. Max lot size is the new addition that enables you to manage your max lot size, funnily enough. So let's say you run a 0.1 lot size with a 2x lot multiplier. Basically what would happen now is you get 0.1, 0.2, 0.4, 0.8, 1.6, 3.2, 6.4, 12.8. So basically what you could do is, you know what? I don't want a lot size above 3. So it would get to 1.6, or you could set it at 3.2, whatever, 3 or 3.2. It'd get here, and instead of opening 6.4, it would open 3.2. Instead of opening 12.8, it'd open 3.2. And it'd just go 3.2, 3.2 until your position's closed. So that can be the difference between you manage a position or hitting your max loss on that particular strategy. It can just take the edge off how your trades and stack of trades are running. Okay, quite straightforward. Close for the weekend, true, false. I'm hopefully confident we can all navigate that. The day to close, we've just made a decision for you. It's going to close at 9 p.m. on your market watch time, because it makes totally no fucking sense for you to backtest what the best time to close has been in your backtest. That just is totally random. Yeah, totally random. You're just fitting what happened in the past on why that was the best time to close. So we've just made that decision for you to stop people making poor decisions and backtesting stuff that doesn't serve you. Day to restart, again, super simple. It's going to restart on whatever day you choose, but it's also going to just start at 1 a.m. on the broker time. Custom trading times, again, is the same. That's not changed. And the good thing now is, you know, the time is shown in that control box panel as well. That's the market watch time. None of that has changed. Here's some new stuff. So max running loss is obviously per chart, per strategy. So again, remember that. It's super important. Restart after loss. You can choose to restart next day or restart in hours. Okay. Please understand that, however, if you keep using restart in hours, you do run the risk of going over your max running loss if everything goes to shit against you. Now, if you're running diversified approaches and different things, then clearly that's highly unlikely and you'd need to just be aware, right? But that's just you understanding the tool again. I restart in hours on most of mine because I know that, well, I'm not going to have everything hit 4K all in one go, minus 1 times 4, because they're all different strategies. And I can make a decision what I even return on or not. So yeah, you would basically, if you wanted to restart in hours, you would put in here how many hours you want it to restart. If I want it to restart in 6 hours time, you put 6 in. There we go. Daily profit. Again, if I wanted to set 500 a day, I would put 500 in, and the EA would automatically restart itself the next day at 1 a.m. and restart that process again. So you can back test to that now, which again is really important. Ultimate target balance. If you're on a 100 grand account and you want 8% to close off, put 108,100 in, just to allow for that little bit of slippage that can happen at times when you're closing a stack of trades or moments of high volatility, and that will then turn the EA off. Okay. Right. Accelerated recovery. Now we made a change. We actually removed accelerate profit because it's not needed. It's not something that's going to serve you and make sense. So we've got accelerate recovery. So just to be clear on accelerate recovery, let's say we run a strategy whereby, again, we've got a 0.1 lot size and 1,000 risk in them settings. If you run a 2x multiplier account recovery and you hit your 1,000 loss, the EA will restart with 0.2 and 2,000. If you hit that, it would restart with 0.4 and 4,000. Now, if the max running loss that you've set on that strategy is actually 1,000, it won't do this. So if you're running 1,000 per strategy, you would even run this a bit lower if you're using this in that way. I've not explored that currently because I'm totally content with my 1000 risks and my diversified strategies, but there is a place for this still, subject to how you like to trade, right? There's some options here with these ingredients for you to choose a strategy that you like that works with your trading strategy and how you want to trade. Now, if my max loss was 4,000, then it would be 1,000, 2,000, and 4,000. Now, I recommend that you can restart next day on this because otherwise you could go over your max daily running loss. Because if you take 1,000, 2,000, and 4,000 in a day, clearly it doesn't take a rocket scientist to work out that you've blown past your max loss, unless you've banked a shitload of profit beforehand, obviously. You can restart in an hour or so, but you just got to be mindful of that. How this looks on a back test is, let's say you've got a strategy that banks and then you hit your 1,000. The whole concept is that this section is going to recover that loss more quickly. So you often get that, yeah? And it recovers that loss quickly. Now, what can also happen is you take a little loss and then you take a bigger loss and then it shoots up and recovers faster, yeah? Because this is the 1K loss, that's the 2K loss, and these settings here are at 0.4. So that's increased that. So what the coder in particular likes about this is we can take a set file that probably is a bit shitter than you would normally consider and flatten out losses and really lower their pain in that back test or in your P&L. So having a back test with a few max losses along the way can be totally managed within this approach as well. Okay, hopefully that's clear. So the options for this are use accelerated recovery, true, false. What's the initial lot size, max lot size, and recovery exponent on that? You don't have to double it. You could just increase the risk a little bit more, and that's okay. Now, the other options that this is using is everything that's above. So pip step, PSE, it's working on all of that. It's just not working on lot size because you're overriding the starting lot size here and obviously the initial max loss here. RSI settings remain unchanged. However, it's how you use them that's changed. So if we look at RSI, again, we've got true, false, super simple. And the time frames are here. So you've got 6 time frames, M1, M5, M15, M30, H1, H4. You don't need any more than that to find an approach that works. If you're looking at just lower time frame stuff, you could just test M1 and M5. That's saving you a load of optimizations from what you would run previously. And same if you wanted a higher time frame, M30 to H4, that's fine to explore. RSI period is still a number you enter, and sell level is a mirrored number. Again, stops you optimizing numbers that are out of parallel. And this is important because otherwise you are potentially overfitting to a trend. And when that trend reverses, your settings just won't work, right? So if you put 96 in there for sell positions, when RSI gets above 96, we'd normally look for sells unless you're reversing. Then the buy level would be 4. So any number is out of 100. So 70, 30, 80, 20, 90, 10, 95, 5, all of that jazz. Hopefully that's clear. Now I'm going to touch on news. So news is really simple, true or false. Yeah. Do I want to trade with or without news? And do I want the trades to close 1 hour before, or do I want them to still be managed? I like them still to be managed because it makes sense to me. Because normally what we see on news in an ideal world, like NFP or FOMC, we see spikes up, we see spikes down, and that can really help. If you've got open positions, just bank them. That's why in some strategies, like my FX strategy that I showed you at the start, it's 50-50. It can make sense to just run all the time because in those moves, you can close stack of trades, you can get in a position and it reverses and then you bank quickly. That's why I've always said there are arguments for strategies to just run all the time or not. You might be running something that you've checked on a back test and you've ran without news because you just prefer that in your body, in your anxiety, in your trading psychology. Look, I don't want to be fucking about in these big news events, so I'm not going to trade them. And I'm going to trade with strategies that are aligned to how I want to trade in a stress-free as possible scenario. No point trading strategies that cause you anxiety and stress. Makes no sense. Right, so on to EMA stuff. So ultimately, there's some big changes here with EMA. So yes, true, false. Yes, EMA time frame. There are 6 time frames. So there are now 3 EMAs, and there are different ways that we can choose to trade them. And there's also a function for how the delay is checked with the EMA as a true, false as well. So previously, we had one EMA and price would go above and below, but sometimes EMA was flat. So actually, we think this is an uptrend and then it does this, or we think this is a downtrend and it does that. It's not really very fucking useful, is it? So that wasn't a good move. It was better than nothing, but wasn't a good move. Now what we've got is multiple EMAs. So if price comes up here like this, then the fast, medium, and slow EMAs are all in line. They're all stacked perfectly on top of each other in order. So this could be a 200 EMA, the blue one. This could be a 100 EMA. This could be a 10, 20, 50, whatever. We've given you options of what to use that again makes sense, that stop you testing totally random fucking numbers, because that doesn't really make sense. So you've got EMA strategies there that you can look to use that make sense. Even if you Google EMA strategies, they'll be the ones that probably come up. So this is an uptrend because we've got them perfectly stacked together. And a downtrend's obviously when they're the other way around. Now, also, there are markets where they're all squiggly and all messy, where they are not in line at all. What that tells us is that that's a ranging market. The market's not going anywhere. So with the EMA filter, we've got numerous ways to trade. Now, we can either just trade when there's a strong trend. So all EMAs are on top of each other. Price is going up. Life's good. All I want to do is trade when there's a strong trend. That's all I want to do. Or you could trade with the range and trend. So whilst price is in here, I'm going to trade long and short. Yeah, going to trade both. The EA will trade both. But when it breaks up, the sell position will still be managed until it closes, but then it'll only open longs. So you've got the choice of going, okay, well, I'm running the diversified approaches strategies. I've got a ranging strategy with gold. I've got a reversal strategy with gold. I need a trending strategy. Well, if you just after a trending strategy, in my opinion, you would test to this approach, because if you've already got a ranging strategy and this is ranging, my concern with that would be we could break out aggressively and you'd hit a loss on the sells. Whereas if you're looking for a trend, I think my preference would be up here. But there'll still be great strategies that you can find in the second one too. Hopefully that's really clear on how you can trade using the trend. Now, the last thing that's changed with EMA trading is how the delay works. So I'm going to demonstrate this with just one EMA. Again, we obviously run with three, but I'm just showing you. So let's say we go in a downtrend. The way the delay works right now could mean that you still open in the opposite way. So let's say this is a sell trend. Because this came above EMA and there's technically a buy that would trigger to open, and then it comes into drawdown and you're running a delay. Now this would look to buy here if you're running delay. And we get a lot of tickets at times where people are going, look, I'm trading with the EMA, yet it's open buys and we're in a fucking sell trend. Well, this is because this little move above this one EMA caused it. Now with multiple EMAs, that's really not going to happen, because they wouldn't just flip between like this, because they've all got to be in line, right? But this causes you to be then the wrong side of a trend just because of this move and because of delay. So you've got an option that's true false to enable you to check, is price still above? We thought it was above. We're going to open a trade. Is it still above? And if you're selecting that you want it to still be above, this wouldn't open. It would only open if this pulled back, let's say, to here, and it's still above the EMA, and then it flies off. So to me, I like that option. Now, if you choose false, this trade will still open, of course. Yeah, so it's just a final EMA check. So we've got EMA true false. We've got the timeframes, the 6 timeframes for you to trade with. And then we've got multiple EMA strategy options: slow, medium, fast. You've got strategies using a 200 EMA with the 10 and 50. We've got some faster ones. You know, if you're looking at lower timeframes, or you can mix timeframes up with all of these anyway. 8 period, 13, 21 is quite a reactive strategy, and you can choose that there. And then these are the options. So the options say, hopefully the wording is clear: trade with the trend only, no trades in a flat market. Okay, so if it's going up, if there's a clear trend, all the EMAs in line with each other, we will just be in buys, but we won't have traded whilst it was in a range. Or avoid the opposite trend. So we're buying in the range and we're buying or selling where the trend's going, but we're ignoring the opposite. And EMA, double check for the first trade, true, false. That's referring to delay and to make sure we are the right side or not before it opens. So that is it. Can you backtest a few pairs at once? No. How you backtest pairs is still going to be the same. You backtest sort of individually. Gus, no. As I said at the start of the video, no current set file will load into V7, none at all. So as I said at the start of the video, when we get to what happens next, we need to now make sure that you've got some set files and approaches and stuff, but also the tools to understand market volatility, pip values, drawdown calculator, so you can use these approaches as well right now in the markets that we're seeing. So they just won't load up. It won't know where to put the information. By all means, you can copy them and reenact your current set files and stuff, but it won't load automatically, mate. Yeah, I'll get to loading some set files at some time, but you need to understand, as I said, that market predictability in using back-tested approaches right now is probably going to be the most unpredictable that we've seen forever. Back-testing something over the last 8 weeks with a 2-week forward is going to give you some clues, but not if something major happens in the world and a pair starts moving 3 times more than it has done within that period, which is what we're seeing. That's why I'm trying to get you to understand market volatility and how to use these tools within that too. But by all means, if you're trading 4 different pairs, pairs, if you're trading, different strategies within them pairs. So what I mean by that is that RSI approach, trading looking for a reversal, but trading to look to bank more whilst it's going up too. Tom, one of our members, was trying to look at gold 3 back in the day that had 85-15 RSI levels. That usually stack 3 or 4 trades. So he even suggested at the time, well, why don't we bank on the 3 or 4 trades whilst it's still going up and then look for the reversal going down? You win both ways. You've just got to understand these concepts. You've got to understand the strategies that we're using here and how to make them work. Looking for reversals and then trend trading. Well, if it doesn't pull back, there's a trend, right? If a market isn't pulling back and it's going up, it's in a trend. So if you ran a trend strategy alongside a reversal strategy, the ideal scenario is there is enough of a pullback to bank and the trend continues and life is great. But you're diversifying one against the other. If one fails, one can win, but ideally they both win. This is bigger than just releasing it from the start, in my opinion. Optimal risk management strategy. For me, optimal risk management strategy is don't just do one thing. Or if you do one thing, you're long, short, split risk, like 2% on each, like on my EU, or you run 4 strategies at 1,000 each. And those 4 strategies could be pairs, or they could be strategies within a pair. So you could run 4 different pairs with different strategies, or you could run the same pair with a hedging and averaging strategy, a trend strategy, a reverse strategy, like trading gold. That's what Scott's put together for me in terms of back testing all these strategies to show you an 8-week in sample, a 2-week out of sample test, and then testing again for 2 weeks to show you how predictable the market's been in that strategy, in all of those different approaches, and then combining what they would have done in that 2-week period. This visual will be shared with you next week, and it should hopefully really close the gaps for some of you that just don't get the back testing process within sample and out of sample data, and how we're looking to do it that way to give us the predictability in the market. This is that key word. We're looking to have a robust testing approach that has an optimization phase that tests it on the market that hasn't been optimized on, and then even more so on that doc that Scott's done. We've then tested it like you would do in the live market. So if you do an 8-week back test now and a 2-week forward, so you're tested over the last 8 weeks, you would just turn it on, go for 2 weeks. And that re-optimization process is every 2 weeks then. And we've got a doc that just shows that visually, and it's fucking really powerful. So yeah, 1% on 4 pairs. You could run 8 at 500. You can do what you like. There's room here for Bailey's used to work really well, and it's working really well for us right now. We've got an account that's 190-ish% up in a month because we've not run a max loss on it. But you know, you could incorporate something like that and bring something into the account without having too much exposure on your account, is what I'm trying to say. Split FX settings sustainable long term. Yeah, why wouldn't they be? As long as you're planning for volatility, what people need to understand is markets go up or down every second. It's a totally viable, valid strategy. We don't need to be obsessed over specific entries that look pretty on your social media feed. They look nice, yeah? Markets go up or down every second. I don't need to have a specific entry if I'm trading that way. I don't need to. As long as I'm working within that range and I review that range and understand if volatility is going up or down, I can adjust it. If I look at this week's data and it's gone up by 100 pips, I can amend them approaches to just increase for a little bit more range and volatility within that strategy. It can be really as dynamic and as reactive as that, whilst also adding a contingency. I built some accounts with Accelerator members this week, Jacob in particular, and we added a contingency. Look, it's done this, it's trending up. Maybe we should add a little bit more to being able to absorb that move. Perfection doesn't exist. It's not necessarily what its average daily range is, it's how it moves within that range. Yeah, hopefully that answers that. 6.5 still works. Yeah, I don't understand this, Ryan. I've explained that all strategies are separate. It doesn't load up one at a time. That's the whole thing that we've been talking about. So if you want to load 4 Euro USD charts, you load up 4 Euro USD charts and you change the magic number on each one, and you could trade Euro USD in 4 totally fucking separate ways. Yeah. So I suggest you rewatch this. Okay, that's it. I hope you fucking like it, but I can't see why it wouldn't. There's loads to go at here. And I guess my tips to everybody is have a growth mindset. Be curious, be willing to explore, be willing to learn, be willing to ask questions, but also make sure you've used initiative beforehand. I don't think this could have come at a better time. And I'm also, do you know what? I'm thankful for things going a bit tough. The amount in our funded chat has died off a little bit. I get it. Yeah. I want everyone to fucking smash it. And hopefully you can see that in how passionate I am about what we do, about the team that's built to support you, the support with the lads. Everything's there. there because we're passionate about helping you get a result. That's totally fucking genuine. It's awesome to see people get funded. Great when I see the withdrawal certificates, and I don't want to see people not achieving that. Yeah. So when we have a period that's tough and it leads to new concepts and ideas, this is fucking great, because we wouldn't have come up with some of this stuff if it hadn't have got tough, right? And this is like life resilience. Sometimes good things come out of bad situations, right? And I think some of these changes and improvements are definitely that, but only if you put the work in to understand them and embrace them and have that growth mindset to be curious and explore and fucking take action. Good news. Right, I'm going to go now. I'm even more impressed. I've stayed at about an hour, but yeah, I've got to go. So we'll see you on the other side. We will work as hard and as fast as we can to make sure you've got everything in and around this that you need to rock and roll as well. So good stuff, everybody, and let's fucking smash this opportunity to pieces. See you soon.